So let's get a word now with Simon Rose. Simon is from the Save Our Savers campaign group. Simon, good morning.
Good morning.
And you and I have spoken in the past on this radio station, Simon. You've been concerned about low interest rates, this policy of so-called quantitative easing by the Bank of England, which has made money more plentiful, but has actually, therefore, hit interest rates. So what do you make of the budget yesterday?
Well, it's absolutely fantastic that savings is back on the agenda and everybody's talking about it. We give only 1.5 cheers. There are some super things in there. I mean, particularly at the low end, it's terribly boring and technical, but essentially if you haven't got much money, there was this 10% savings tax rate. That's been abolished. It was so complicated, only about a quarter of the less than 4 million people who qualified ever bothered applying for it. And I hope that will mean, real help to people who haven't got much money. The pensioner bond, if you are a pensioner, seems attractive. Interest rates are low, but hey, we're going to bribe you to vote for us by giving you some more money. Well, fine. I mean, if you're a pensioner, take it. It's not often the Chancellor gives you a free gift. But it is interesting, I think, that the last time George Osborne really wooed savers was 1 year before the last election, and lo and behold, we're a year ahead of the election, and he's wooing savers again because he knows that savers tend to be older, and it's the older people who vote at elections, not the youngsters who become, for some strange reason, rather cynical about our politicians.
Well, you're being slightly cynical about his motives, aren't you, if I dare not say to Simon? But, I mean, at the end of it, people will judge him by his policies and how, they'll take a view about how it affects the nation, of course, but also how it affects them. If you are a saver today in the West Midlands, as a result of this budget, do you face the prospect of being better off or worse off as a result of this budget?
If you're a pensioner, you might be better off if you get one of those pensioner bonds.
I said it as a saver.
But I'm afraid for most people, the real problem, the elephant in the room, is low interest rates. That's what's really been hitting savers. That's why we reckon they've lost something like £326 billion has been taken from the pockets of savers in the last few years and transferred to borrowers. And, of course, it's low interest rates that explains why we've got this cost of living problem. Because for most of the last 5 years, inflation's been way above target. And you really have to ask anyway, why do we have a government of whichever stripe that says we have to have 2% inflation every year? That's undermining our currency by 2% by diktat every year, which means that over about 30 years, your money halves in value.
Yeah, although it's a good way of paying off the national debt by stealth, isn't it?
Now who's being cynical? You're absolutely right, because the government is the biggest debtor. And, if you look at the figures yesterday, this Office of Budget Responsibility, which George Osborne was always very pleased to sort of point out how independent they are. Well, if you look at the very boring numbers they produce, it not only shows that the government's debt is going from about 1.2 trillion, that's 1,200 trillion now, to 1,500 billion in 3 years' time. Well, so government debt still going up quite alarmingly, but at the same time the OBR say we're going to be saving less. As a country, 2 years ago we saved about 7% of everything we earned. That's about average. Now it's 5%. OBR reckon it's only going to be 3% in 2 to 3 years' time. Well, the real problem is not just that savers aren't going to save more, they're going to be saving less, they're going to be spending more. That does boost an economy short term, but ultimately what we need for a sustained recovery is investment, and that only comes from savings. And if you're only saving 3% of your national income every year, you're not going to get very much investment on the back of that, I'm afraid.
One of the most eye-catching headlines was the decision to increase ISA allowances. These are for people who've got savings in an individual savings account, and the amount that you can save in an ISA, which is tax-free, has gone up to £15,000. You've got to welcome that, Simon.
Well, I suppose so. I mean, I'm a little worried about the level of the stock market. I confess I tend to stick with the cash rather than the stocks and shares bit. But certainly in the stocks and shares stuff, when you're getting a little bit more in your ISA, it's making it much more flexible. That will be good news when we return to a more normal economy, but there's still the problem. If you're losing money in cash, increasing the limit on an ISA isn't necessarily staggeringly helpful. It'll be better further down the line if the next Chancellor, if it's not George Osborne, doesn't change it. But I'm afraid there's a lot of eye candy yesterday, and I think when things settle down, we'll realise it wasn't quite as fantastic as we thought it was.
Simon, great to speak to you. Thank you. Simon Rose from Save Our Save.